What's going on, you guys? My name is Zach Hartley, and in this video we are going to talk about the recent short squeeze on Gamestop Stock. I'm going to break down for you what happened, how it happened, and how I am handling it. Here's everything you need to know. Let's go. Okay, so first of all, GameStop trades under the ticker symbol GME. They trade on the New York Stock Exchange. They're headquartered in Grapevine, Texas, and the price as I make this video is $147.98, giving them a market cap of $10.3 billion. This is what their logo looks like, and their business model is that they sell video games, video game accessories, and consoles out of brick and mortar kind of retail stores. That is how they started. That's kind of what the business model has been recently. I know they're trying to make a push into online and a couple different avenues, but that's pretty much what the company is based on, and that's been their primary business model recently. Now, short selling, this is something that we need to just clarify and you need to understand before we can move any further. So I'm going to give you the simple explanation of what short selling is. Short selling is making money when the stock goes down. So if you think GameStop stock is going to go down and you want to profit on that move, you can't buy the stock and make money on that move, so you need to short the stock or short sell the stock. And what happens there is you borrow the stock, usually from your broker, sometimes from the bank, whoever it may be. You borrow that stock and you go sell it in the market at the market price. Let's say it's $100. Then 2 weeks later, if the price goes down, you can go into the market with that same cash. You can buy that stock back for $50, return it to whoever you borrowed it from, your broker or your bank, and you can give it back to them. That way, you fulfilled your job there. You sold it into the market for $100, you bought it back for $50, and you just profited $50. That's how you make money when the stock goes down. That's what short selling is, but you need to understand that you are borrowing that share from somebody, so you're going to pay a little bit of interest on that. And the other side of that is that if it goes the other way, you have unlimited risk. Now, to explain that, let's just go through an example. So let's say you've got a $10 stock, you go short on it, and then the stock falls to $6. Well, you sold it into the market at 10, you go back in, you buy it at 6, you give the stock back, and you've now made $4 per share. You could do that with one share, with 1,000 shares, with 5,000 shares. It doesn't matter. On a per share basis, you would have made $4. Now, let's say that the stock goes the other way. So you've got a $10 stock that you go short on, you borrow that $10 stock from somebody, but that stock increases in price and it goes to $80. Well, in order to get out of that trade, you now need to buy that share back from the market at $80. You need to give that back to the person that you borrowed it from, your bank or your broker, and that means that you went into the market and you received $10 for that share, but you then had to go in and buy it back for $80, which means you lost $70 on that trade. So on a $10 share, you lost $70. And if it had run higher, if it had run to $1,000, you would have lost $990. And so what I mean by unlimited risk in shorting the stock is that if the stock goes higher or to $1,000 or to $1 million, it could go unlimited amount higher and you have all of that risk. If you buy a stock and it goes to $0, you have 100% risk. If you buy it for 10 and it goes to 0, you lost 100% of your money, but you will never owe anybody money. It's different when you come to short selling. You can owe more than your initial investment. That's the scary thing with short selling. And so a short squeeze is when short sellers are pressured to buy the stock back to cover their initial position and prevent further loss. So in order for you to get out of that trade, like I mentioned, you have to go into the market and you have to buy that share back at whatever the price is, and you have to give it back to whoever you borrowed it from. And so a short squeeze is when you get a large amount of people that have to go into the market to cover their positions. And that can be caused by a variety of different things that we're going to talk about in 1 minute. But before we do that, let's talk about GameStop. So this is a business that's been around for a long time. They've been reporting financials, and unfortunately they have declining revenue, they have declining profits. They're a brick and mortar business model that doesn't have a whole lot of hope, especially if we go back into lockdowns right now. And their games, a lot of the gaming industry is moving to a model where you can go in and you can buy your game on the console from Xbox or from the PlayStation Network. You can go in and just buy the game there. You don't actually have to go to a store to get that game anymore. And so the business model is changing, and overall, the company has not been doing very well recently. In the last 3 to 5 years, I could say that the company isn't doing extremely well. And because of that, Wall Street, not Reddit or WallStreetBets, but Wall Street as in hedge fund managers, money managers, mutual fund managers, the people that control Wall Street and make the decisions there, a lot of them had shorted on GameStop. And so that was the situation that we were left in. And now when you look at the fundamentals, you can see why they might have shorted GameStop. As you can see, we've got $9 billion in revenue in 2018, and then it dropped to $8 billion, and then it dropped to 6.4. So we've got significantly declining revenue. The company is losing money for the 2019 and 2020. They lost money. So not a good look for GameStop when you look at the financials and when you look at the stock during that period. So this goes back, I think, to 2016, a high of $33 and then a low of $2.57. This stock did not perform well at all over basically a 3-year period. It was a pretty much slow and steady decline, and that is why it was one of the most heavily shorted stocks in the market. And you can see that if you shorted the stock back here in 2016, 2017, you would have done extremely well. You would have made a bunch of money, and it was probably a good trade. However, things have changed, and that is what we were talking about in this video. So, WallStreetBets, this is an online chat forum that has lots of active traders. Some of them have a ton of money, some of them have a little bit of money, but there is sure a whole heck of a lot of them. This is the website if you want to see what Reddit is and what this basically forum is. It's kind of like a big chat where anybody can put in anything they want, and the popular posts or the popular articles get kind of lifted to the top so that more people can see them. And a lot of people post their trade ideas, their research, and they also post their screenshots of their big wins and their big losses. It's kind of a wild community. It's kind of a wild chat, and a lot of crazy articles are in there, and a lot of crazy trades are in there as well. So make sure you do your due diligence and you manage your risk if you're going to make any trades based off it. But it is a big community, and we saw today and the last couple days how powerful it really is. And so what happened over the last 6 months that led up to the last few days with GameStop making all the headlines? Number one, a couple new investors came into GameStop. So in the last sort of 6 months, a gentleman named Ryan Cohen, who is basically the founder of a pet food e-commerce company, millionaire, did extremely well on it. He is now invested into GameStop, and I believe he bought like 10 or 13% of the company. Next up, we also have new consoles coming out. So new Xbox, new PlayStation, all just hit the markets this year, which is usually a good thing for a gaming company like GameStop. Gives them a fresh new batch of games that they can sell and bring in revenue with. They also signed a revenue deal with Microsoft that is going to give them some access and some cash flow based on the sales on the Microsoft system. So lots going on sort of behind the scenes there. And then with all of that going on, a couple people on Reddit were starting to realize it and notice it and put together some articles, some research, and some trades on it. And they posted them in Reddit. And most of it was positive research that said, hey, here are all the catalysts and why I like GameStop and why I think there's an opportunity here. And at the same time, Wall Street is so short on it. It's the most heavily shorted stock in the market right now. And if everybody on Reddit bought into this stock or saw what I saw, then there's definitely the opportunity for a short squeeze there. Now, that wasn't explicitly stated, and nobody said that, and this wasn't kind of organized that efficiently or that officially, but that is sort of the idea behind a lot of these posts. And a lot of people in the Reddit community saw that as a trading opportunity. And so what happened? Well, number one, Reddit members bought GameStop stock and options, which drove the price up and put pressure on the short sellers. Now, you have to remember that Reddit community is basically retail investors like me, dudes sitting at home playing with their retirement funds, playing with their fund money. And then Wall Street is basically the hedge fund managers, the mutual fund managers, and the guys that are out there dealing with private capital. So you got Wall Street, and then you got WallStreetBets on Reddit. Those are the two kind of sides here. And so Wall Street was completely short on GameStop. Huge hedge funds, totally short on GameStop, and Reddit was coming in on the other side saying, hey, we think there's an opportunity here, and we think you guys should probably be buying it, to everybody else in the community. And so everybody else in the community started buying it. They said, yeah, there's an opportunity here, and it could put the squeeze on all of the short sellers on Wall Street. And so that's what they did. They bought the shares, they bought it up, and they slowly put more and more pressure on it, to the point where the short sellers were then forced to buy the shares to cover their positions, and that drove the price even higher. All of the Wall Street guys were super short on the stock, and because they needed to basically put a stop loss on the trade and get out and cover their loss, they then had to go into the market and buy those shares at whatever price they could get for it. And because the people on Reddit were buying it and holding it, there was almost no shares available, which drove the price even higher and higher and higher. And that is how we ended up with a stock chart that looks like this. So yes, this is the exact same chart that I showed you prior to this. As you can see, the price was right here around $20-$30. It fell down to $2.57, and now today at the close, the stock was up 92% and trading at $147. Absolutely bonkers, bananas. This is absolutely insane, and this is the online Reddit community completely sticking it to the Wall Street hedge fund managers and professional traders. This is the retail investors saying, screw you guys, we're gonna show you what it takes to actually make some money in the market, and this is what they've done. And there are guys on the Reddit community that are posting screenshots making millions and millions and millions of dollars. So really, really amazing. And when you zoom in, this is kind of the last 2 weeks, you can see the stock crept back up to $12 and then all the way to like $20 or $30. And then over the last 2 weeks, it has just broke out like absolutely mad, closing at a high of almost $150 today. Absolutely just insane movement here. And this was a $2, $3 stock just less than 3 to 6 months ago. So crazy, crazy movement here. Now, what is happening now with the stock? What are people doing? This is all over the headlines and everybody needs to have a game plan now. So what is happening? Well, number one, anybody that is still short on GameStop and isn't doing well on that position is probably getting a margin call. That is what happens when you don't have enough money in your account to cover the risk of that short position you took. Your broker or your bank calls you up and says you need to either liquidate your positions or you need to put more cash in here to cover your positions. And that is what is happening right now, and it's forcing a lot of people to cover their positions and buy the stock at whatever price is on that chart, which is absolutely insane. And at the same time, there's a lot of guys on Reddit doing extremely well on this trade. Now, just to show you a couple of headlines, here's just a quick little article from Market Insider. GameStop short sellers lost $1.6 billion in a single day. This was posted yesterday, and I'm sure that number is even bigger now, which is absolutely insane. And if you look at this, there's still an exorbitant amount of short interest in this stock. So if you look at short percentage of float, so float is the amount of shares that are in the market, and short is the number of shares that are being borrowed to go short against this stock. And now, as you can see, right now it's 260.91%. And I know you're thinking, how can this be above 100%? And here's how it works. Let's say you have a bicycle and I borrow your bicycle. And then my friend borrows your bicycle from me. He owes me a bike and I owe you a bike, but there's only one bike. There's two debts, but there's only one bike. And so what's happening here is that people are going short on the stock, and then they're lending those stocks out to other people that are going short on the stock, and then they're lending that stock out to other people that are going short on that stock. And so now there's multiple debts all around literally just one stock. So really, really kind of crazy situation. But think of the bicycle. I borrow your bicycle and then I lend it out to somebody else. There's now two debts for one bicycle. That's what's happening here. And if you look at GameStop, the short percentage of the float is 260%. If you compare that to a similar retailer, Best Buy, they do a lot more in tech, but they're a retailer that sells video games as well. The short interest on Best Buy is 3.1%, which means out of all the shares in Best Buy, 3% of them are being borrowed right now to go short. And if you look at GameStop, it's 260%, which is absolutely just bonkers. So there's still a ton of people going short on GameStop, probably for good reason at these levels, but holy cow, this is just so risky. And so as we sit right now, GameStop has a market cap of $10.3 billion. It is probably the best return out of any stock in 2021 so far, at least on the New York Stock Exchange. And personally, I think with that many people going short and the amount of tension that it has right now, I think it still has at least a little bit of room to run higher. We'll see how tomorrow goes, but that's my guess. Now, in reality though, this is a company that has lost money for 2 years in a row. They have declining revenue and they have a very tough business model that is going to take a lot to turn around. So are they actually worth $10.3 billion right now? No, they're probably not, but there's so much attention. It's now got some pretty good brand value along with it as well. And so depending on how this plays out, we'll kind of see what happens. But as of right now, it's a tug of war between WallStreetBets on Reddit and actual Wall Street hedge fund managers. And I'm really excited just to see it play out. And so my thoughts are that I'm not going to be trading it. I don't want to buy into it and it dips out tomorrow. And I don't want to go short on it and these guys keep making it run higher. I don't want to go either way on it. So I am not going to be trading it, and I'm definitely not going to be shorting it. I think that's just kind of risky with how much attention it's getting right now. And so I am sitting this one out. If you decide to play it, I wish you all of the best, and please let me know how it goes. I really want to see it. But this one is for my entertainment. I'm going to watch this one from the sidelines, maybe make some videos about it and comment on it, but that's probably it. This one is a little bit out of my wheelhouse. I don't like the business model. I don't like GameStop in general, so I'm not going to be holding this one long term. And if you decide to short any stocks, please make sure you are very careful because, as I mentioned, it has unlimited risk. Now, if you'd like to learn more about the stock market, analyzing stocks, reading the charts, and understanding the fundamentals and the financials, then definitely consider signing up for my stock market course. I have put over 9.5 hours of content into this course, and it is completely free when you sign up for a 2-week free trial on Skillshare. There's a link down in the description below. There's over 1,500 students that have gone through the course. There's over 100 reviews for you to read, and you can basically do the entire thing completely free if you sign up for the trial and cancel before the actual subscription starts. Otherwise, it's about $20 per month, but Skillshare is an absolutely amazing platform. Now, in summary, please be careful if you decide to short. Be very careful if you decide to trade on GameStop, especially going into tomorrow and the next day. I think it's going to be extremely volatile. It's going to be very risky, and you need to make sure you manage your risk appropriately. And if you get any value out of this video, please consider hitting that like and subscribe button. It sincerely helps me out, and I really appreciate it. We'll see you guys in the next video tomorrow. Thank you so much for the support. Talk to you soon.